When we look at the fundamentals, it was actually a really strong half year for Woodside. So production was up 11% versus the comparable period last year. Our unit production costs were actually 7% down. So great work across the business in driving production up and managing our business costs. Now, the profit did dip. That's a result of higher depreciation costs as we've brought online a new asset, the Sangomar field in Senegal. But again, Sangomar, when you look at the bottom line, almost $1 billion of revenue, very significant contributor to the cash flow. And that's been a key part of the success for the first half of the year. Also pleasing to be able to return good value to our shareholders with a dividend of 53 US cents per share. That's about a 6.9% annualized yield. And it's a fully franked dividend for our Australian shareholders, which is something we know they value.
Meg, just on Sangomar, we saw production costs there hitting $773 million. Will those costs normalise, or will they also drag into earnings through the course of the second half?
Look, let's just clarify. So those are the depreciation costs. The operating costs, the cash costs were much lower than that. We have also announced in the half year that we're adding reserves. So as we add reserves, that brings the depreciation rate down. So the rate will come down and the total depreciation will be lower in the second half of the year.
Investors will also notice the dividend cut. Meg, I know you mentioned that they're fully franked for your Australian investors, but are payouts going to be under pressure longer term?
Look, we've been doing quite a bit of modeling to understand our forward expenses, particularly now that we're in a period of high capital spend with a number of major projects underway, both in Australia and overseas. We're very pleased, actually, that this dividend is a payout at the upper end of our payout range, 80% of underlying net profit after tax. The balance sheet is in really very strong shape. We've had the ratings agencies affirm BBB+. So in great shape, we've got very strong liquidity. We've been taking steps as well to help relieve some of the capital investment pressure. So, for example, we've brought an investor, Stonepeak, into our Louisiana LNG project. We've divested a late life asset in Trinidad and Tobago. So we're taking a number of steps to ensure that the balance sheet remains strong and resilient so we can reward shareholders while continuing to invest in growth.
Meg, let's talk a little more about that project because you mentioned Louisiana LNG, big focus for investors. You've said Woodside is exploring potential collaboration with the likes of Aramco, for example. So unpack that for me. What does Aramco bring to Louisiana LNG and how advanced are those talks?
Well, we were very pleased to be invited by Aramco to attend the U.S.-Saudi Investment Forum that was held in May. And it was on the sidelines of that forum that we signed the MOU with Aramco to collaborate on LNG opportunities and potentially low-carbon ammonia opportunities in the U.S. Look, Aramco is a tremendous company, incredible history in the oil markets. You may have seen their growing interest in liquefied natural gas as they think about broadening the commodity mix that they produce. So we would be delighted to partner with them in LNG. Discussions are continuing, nothing to update. When we have something signed, we'll be able to advise the market accordingly.
You're also in talks with Kuwait's Petroleum Overseas Unit. How serious are those discussions?
Look, I'll talk about Aramco because we have an announced MOU. We also announced a collaboration agreement with a couple of the Hyundai company entities, but we haven't announced any other potential partners. And, we'll continue talking to those potential partners. Hopefully we'll be able to secure the right partner at a price that provides value uplift for Woodside shareholders. And look, we're well on the way to securing one or more partners in that space.
Okay, so still in talks with partners. And Meg, of course, it's not lost on you that Louisiana LNG is a huge bet. It's a $17.5 billion project. President Trump in the United States has also been very direct. He said that we need to be buying US energy to avoid US tariffs. So is selling these stakes or bringing in Middle Eastern partners partly as well also about appeasing Washington?
At the fundamental level, we've got a fantastic project. So we have a fully permitted site up to 26.5 million tons. The final investment decision we've taken is only 3/5 of that capacity, about 16 million tons. We have a fully priced lump sum turnkey contract that is at very competitive pricing. So we have a highly advantaged project in the base case. Look, the U.S. desire to attract foreign investment into the U.S. certainly doesn't hurt the level of interest. But at the end of the day, we have a quality project which provides a quality investment opportunity for our potential partners. And that's what we're really emphasizing in our discussions.
Despite the political risk, I guess you could say. So, Meg, how soon before we see pen put to paper on additional partners here and we actually get sign-off on all of this moving forward? I understand it is moving forward, but of course, Woodside can't go it alone, right?
Well, we actually already brought in a partner. So Stonepeak came in with a 40% stake in the infrastructure company. So the way we've structured the venture actually is very clever. So we've got an infrastructure company that owns and is responsible for operations of the LNG plant, generates a very predictable return that an infrastructure investor would be interested in. And then the opportunity we're selling down is at the parent company. So with Stonepeak's investment and the fact that they're covering 75% of the capex in 2025 and 2026, actually gives us a bit of schedule flexibility. So we're going to be very disciplined. We're going to talk to only high quality counterparties, and we're going to make sure that we have terms and conditions and value that's good for Woodside shareholders. So we're going to be disciplined and patient.